What's up, everybody? It is time for another AnswerStock with Paul, the man Scolardi, and Matt, the young George Washington Owens. How are you today, guys?
Doing very well.
Doing good.
Doesn't his hair look like it's in one of those George Washington hats? He just crossed the Delaware. I saw you on the History Channel the other day. Congratulations.
Nice job.
Thank you.
Young George Washington, and we have a young Superman. Are you excited for your movie coming out, Superman?
Yeah, but I think there's the lame scene. I'm already annoyed at the lame scene that they previewed in the last trailer, where obviously Batman gets a hold of kryptonite. If you can't win,
really?
If you can't, well, yeah, that's in the comic books too.
I haven't even seen it. I don't even know.
If you can't win a fight fair, then don't cheat. That's a lesson, kids out there. Batman is a cheater.
Well, yeah. I mean, he cheats with the nanny, if you want to go into real life.
Exactly.
Yeah. So.
In all facets.
All right. So what are you guys thinking right now? The market's tanked before. Now they're coming back. What do you see the rest of 2016, Paul?
Well, I see a lot of great opportunity. I mean, I think the market's still going to be choppy, but what we're seeing is there's a lot of great stocks, earnings winners, bounce plays, particular chart patterns that I teach have become even more predictable. And I think the quality stories are going to be there on the long side, but you have to have a profit-taking plan and be able to also take advantage of the short side or good entries on pullbacks. But I'm excited. I think the market has really opened up, and I think there's always going to be quality opportunities, and I've been very consistent. My trades have been much shorter term this year than last year, and that's just what the market's giving right now, but very consistent winning trades in the last 3 or 4 weeks.
General George, what do you think?
Well, I have to congratulate Paul. He got that consistency thing is very true. In the last couple of months, you've been doing really good with that. But overall, the market is at a watershed moment up at 2016, 2000, and if it fails, we will see a test of the lows again. I think it's been pretty smooth up until the last like week and a half. Trading's been very smooth. The expectation was for them to hold 1800 and try to take out this 2016 area. But overall, it's kind of in an interesting area, and it's either the bulls take it back and we go up to 2060 or hit new highs, or they fail and we go all the way back to the bottom and test the lows.
Are you kind of going?
We're going to go either up or down. Is that right, Matty?
That's right.
Are you kind of going because the new Game of Thrones trailer was out? Are you kind of going Jon Snow winter is coming?
I don't watch Game of Thrones. So.
You don't?
No.
Tim, you do.
Of course. I'm excited. No, I like that the market's back. There's a lot more volatility, a lot more plays. I mean, my watch list is now like 10, 15, sometimes 20 stocks strong, and I have to I'm missing plays left and right, and that's a good problem to have. Before, February, that was like winter, okay? Those fucking ice walkers, whatever they're called, Wes Welkers, they were like just shutting everything down. But now there's plays galore, so I think it's fantastic. Let's get to the first question. This is from Eric, and he says that I'm seeing a lot of crazy spikes with no catalysts. Would you ever consider shorting these kinds of plays, or do you prefer catalysts? What do you guys think?
What is the question? There's a lot of spikes without catalysts.
Yeah, and it's like he doesn't know if he should short stocks that are up a ton when there's no specific catalyst. Like, I think he's probably referring to a lot of these oil stocks that are up, just a ton, and it's because oil has rebounded. Would you consider shorting those?
Well, I think, when you're going to consider shorting or long stock, you got to have a trade plan. And I'm not just going to short a stock because it has no catalyst. Because, if we're talking about oil stocks, they've been bouncing and they can squeeze longer than you think. I think I'll consider shorting them if they fit into specific chart patterns which I use and teach. So yes, I'm going to look at anything. but you can't just, you've got to have and this is, I think, why we have all committed to teaching people, because you've got to have a strategy and a trade plan when you make a decision like that. So
yeah, I don't like shorting stocks that have no catalyst, because I don't know if it's up on a rumor, if maybe some people are talking and they're going to announce a big contract. Maybe it is a good short and I should short it. I like to know the reason why. And I like to short pumps, like XLIT, BPSR, CLOW, PGSY. These are so blatant. You know the catalyst. It's not a question of if they're going to crash. It's a question of when. So that's easier. No catalyst is scary to me. What do you think, Matty?
I don't know. I haven't really been trading stocks all that much. I mean, futures has been just...
That's fine. You're from 1776. Let's get to the next question. We got a question from Kamal. What are some good finance books to learn on how the market works as a whole? I'll start by saying, this strategy doesn't really work that well right now. William O'Neill, How to Make Money in Stocks, but it's a great basic book that talks about, how to value companies, how to look at growth, how to look for momentum, and it's the CanSlim approach. And again, it's not a strategy that's working so great right now. Also, How I Made $2 million in the Stock Market by, some professional dancer in the 1950s, and Reminiscences of a Stock Operator. Those are my top 3 books for the overall market.
Yeah, I agree with those 3 books. And, if you're people that come to me, I'll just add one thing. People that come to me and then are brand new and have no exposure at all to stocks or finance, I tell them to either get the Stocks for Dummies to learn all the terms, or go to a free website called Investopedia. And that comment is for people that are brand new to stocks.
My 3 favorite books are Stock Market, or all the Wizard series by Stock Market Hedge Fund Wizards by Jack Schwager. I think all his books are good. If you want to get into security analysis, you have to read Benjamin Graham. It's boring, but it's good, especially when you talk about nets. And another book I really like is The Pitbull by Marty Schwartz. So those are kind of my 3 favorite books.
I also like that, that first Jim Cramer book. What was it? Confessions of a Wall Street Addict or something like that. And, he wasn't bullshitting back then. He wasn't.
Yeah, that was his first. That's the only book I really ever read by him.
That was fantastic, and he talks about how hedge funds manipulate prices, and then he turned into a fucking male, Susie Orman, and all the rest of his books suck. But that was fantastic in the beginning. Let's get another question from David. Okay. So how do you guys trade stocks right at the open? He doesn't know. Should I try and buy a stock that's strong right away, or should I wait a few minutes to see how the price action goes? Or should I short? How do you guys approach stocks right at the market open?
Questions like that, I would encourage individuals to have questions like that to really, learn a strategy. Anytime I make a trade, I have what we all call a trade plan, which has a plan around entry, which is not chasing a stock, a stop loss if the trade doesn't work, and a profit-taking plan if it does work. As far as the open, what happens at the open is going to be defined by where it goes in my trade plan. I don't obsess about specific times of the day when it comes to stocks as much as I look at how the stock is moving compared to the specific trade plan I have for that stock.
I completely agree. But usually I give it 15 minutes. That's my rule of thumb at the opening, just to see what happens. So.
Yeah, I rarely ever really enter in a new trade right at the open, just because even if I'm right, even if I'm going to catch the morning spike, by the time I even send out the alert, the price is going to change. I'm either going to be right or wrong. I might even be out of the position in the first few minutes, because if you're buying a breakout, they can end very quickly. Or the stock at the market open, if there's news, there's catalyst, it can spike up very quickly. So it's tough for me as somebody who alerts trades to even do that. Most of the time when you see me trading at the market open, I'm closing a position. I'm closing a short overnight, ideally into a morning panic, or I'm selling a long, ideally into a gap up. That's what I like the volatility at the open for. Maddie, what is that? Are you drinking whiskey like George Washington?
No, it's tea.
Let me see that. That looks like whiskey. You're just drinking Jack Daniels right out of a freaking cup.
out of a,
like old GW
out of a large
do.
tumbler. Out of a large tumbler.
I promise.
It's been a tough winter at Valley Forge. You just wanna heat the belly. All right. One final question.
I'm a drinker.
This is a good question. For everybody, this is from Mateo, and he says, how do you go about exiting positions, all three of you guys? Do you have a set percent that you want to make, a set dollar amount, or do you pay yourself gradually, and exit the positions partially at a time?
Matt, you want to go?
Yeah, I'll go.
George W? GW?
So how I trade is I scale in and out. So I have where I want to get long, and then I go in maybe like half of my position, and then if it starts to work in my favor, I scale in a little bit more, and then I have a range of where I would want to take profits, and then I slowly peel profits off from that perspective. And usually I'll hold a couple shares, or by a couple I mean a couple thousand or a couple hundred depending, or a couple contracts left just to see if it keeps going up. But I generally am a big proponent of peeling off profits on the way up, or if I'm shorting on the way down. I really don't like to hold an entire position, if it moves on a stock 50 cents to $1, or a contract if it moves 5 to 6 points, without taking some profits on the way up or down. I just feel safer doing that. So, and that's something I think Paul stressed to me a lot when I first started to do that. So, and it helped me just calm down a little bit and not be so. And it also psychologically helps you to stay with a position. If you want to, at least you've locked in something. So.
Yeah, I mean, I agree. That's a lot of what I teach as far as partial profit taking. You take partial profit when you're up, either on a long or a short. You have the best of both worlds, because you're locking in profit. If the stock continues to go up or in your favor, you're stress-free and you can just watch it and have fun watching, make yourself more money. If the stock it ends and it starts to go down, you've already protected profit. You can move up your stop loss and make sure it's a profitable trade. So you take a lot of stress off, and you still can make money if it keeps going. But if it goes against you, you can still protect your profit.
That's all nice and good for superheroes and the first president of the United States, but I'm just a cliental. I'm a little Jewish man. I don't have that many trades available to me, so I like to take profits. I take it one at a time. I take 10%, I take 15%, I order a matzo ball soup, I order a poppy seed bagel. Don't give me too much smear. No, but a lot of people, it would be nice to get in and get out gradually, but for me, I go in with a plan. I want to make, 10, 15, 20, 30% on the trade. If it's working, if I'm like 3/4 of the goal, and I don't want to hold the stock overnight, I don't want to wake up early, or I don't want to risk, overnight news. You have to make trading work for yourself. It's not just about the dollar profits or the percentage profits. Comfort, scheduling, these play a part in how to trade. I know a lot of traders who are just part-time traders, and they just want to take advantage when there's, a great setup or something like that. They can't get to the haircutter every day like Matt. So it's like whenever you can get there, you do it. But, Matt has a busy schedule, so he can't get a haircut. A lot of other people have a busy schedule, so they just fit in trades whenever they can. So you have to learn from George Washington. You have to fit trading into your own schedule, make it work for you, be comfortable, and, that's how you really get fulfillment and you feel happy. And it's not just about the money. I know a lot of you think it's just about the money. Like I talk all about my millionaire students, but I have a lot of students who aren't millionaires, and they're very happy. And, a lot of people who aren't even trading yet, and they're happy, and they're just learning. So don't feel like there's any one right formula on okay, you must do this. Try out, try to exit your positions all at once. Try to scale in or scale out if you have the trades. If you're like Superman, you have patience to hold for 3 weeks. I don't know how to do that. So you have to choose your own personality and choose what works for you.
Trade within your comfortability. That's what it comes down to.
Say that again?
I said you have to trade with what you feel comfortable with risking, basically. That's what it comes down to.
I think you said comfortability.
I did, actually.
If you guys have more questions, we're going to keep doing Answer Stocks. Send your email questions to admin@timothysykes.com. I still have a lot more questions, but I got to get going. Peace out.
All right, later.
Take care.